Derrell Peel, our livestock marketing specialist, joins us now. Derrell, you've been analyzing the latest U.S. trade data. Let's kind of kick it off looking at the exports.
For the month of April, which is the latest data we have, total beef exports from the U.S. were down about 5% from a year ago. We're still, well, actually that brought us for the year to date down just fractionally. We started out the year a little stronger. It's backed off just a little bit. We're down to most of our major markets. The Asian markets are still pretty weak. The one bright spot in this in the last couple of months is that Mexico has emerged as stronger for exports, and so maybe we're seeing some recovery there.
And then, of course, naturally, let's look at what imports look like.
The brighter spot here is that beef imports, which have been very high the last couple of years when beef supplies were so tight in the U.S., are down significantly. We've imported a tremendous amount of beef from Australia, quite a bit from New Zealand, both major markets, and they're off sharply. On the North American continent, we are seeing some year-over-year increases in imports from Canada and Mexico, but overall, beef exports were down 21% in the month of April. We're down almost 13% for the year-to-date so far.
And then in terms of live cattle, are you seeing some of the same trends?
For Canada and Mexico, most of our cattle trade, we're seeing reductions there as well. Again, shortages of cattle and high prices the last couple of years had brought in more cattle, at least from Mexico. Those are beginning to decrease a little bit. And Canada, we actually imported slightly more slaughter cattle going straight to the packing plant. But in terms of feeder cattle supplies, down sharply. So overall, we're down on feeder cattle. We expect that to continue for the rest of the year.
And I think anytime we are taking a look at a report, it's always a good time to break that down for producers and consumers. What does that picture look like?
Well, in general, the trade picture has behaved just exactly like you would expect the last couple of years in terms of market reaction. Trade is kind of a shock absorber. When supplies were tight and prices were record high in the U.S., we tended to bring in more imports. It restricted exports. As prices come down in the U.S., we see exports start to recover, imports start to moderate. And, again, the other thing that's going on, of course, is the dollar impacts the value of exports and imports. The dollar's still pretty strong, so that hinders exports and tends to support imports. But depending on what the dollar does, we expect this trade picture to continue. It's slowly improving as we go through the year.
Okay, keep us posted. Derrell Peel, we'll see you again soon. Thank you.